Welcome to B2Education Unpacked, the podcast where we get under the skin of the business of education. I'm your host, Stella James, and in each episode, I'll sit down with inspiring guests from across the education sector, innovators, leaders, and change makers, to explore the trends, challenges, and opportunities shaping the future. Whether you're working in education, building solutions, or just passionate about the future of learning, you're in the right place. Let's unpack the big ideas and real stories driving education technology forward. Welcome back to the Educational Podcast. I'm Stella. Catherine Lane just showed us how EdTech companies market themselves. Ed Tranham tracks where the money actually goes, and there's two things that don't match. Ed publishes the assignment report, 20 years of M&A data, funding rounds, company performance. He knows which companies survive and which ones disappear. And he's just named the company of the year, IMP Software. They sell and procurement software, nothing sexy, and yet £14 million worth of revenue, 40% growth, and 120% net retention. Meanwhile, companies promising to revolutionise education are quietly dying. So let's talk to Ed. And let's have a look at why funding doesn't predict success and what survival actually looks like when you follow the money instead of the marketing. So welcome, Ed.
Good to be here, yes.
For the second time.
Yeah, for the second time.
Right. We did try first
for those
time.
who missed the first one.
Yes. We did try bet, didn't we?
We did try bet, but yeah.
We've had
technical problems at best, ironically, yes.
But it's good to have you here.
Yeah.
So let's dive straight into the questions because I don't want to take up more of your time. So Catherine has just talked about EdTech companies and marketing themselves to schools. And obviously you do the assignment report, which you've been doing a long time. So you track where the money goes and where it compares to what most revenue funding versus the best customer and retention rates. So how big is the gap and what does that tell you about EdTech in solving the problems?
Well, I think the biggest issue with EdTech continues to be identifying what that problem is. In many ways, if you're looking at schools, I think you mentioned IMP Software as are a good example of the business to actually, for its initial 5 years or so, bootstrapped itself without any external investment. And I think if you look at IMP Software, one or two others, not necessarily in the EdTech's, for example, Twinkle, I would classify them as a pure EdTech play. Well, they are. There's two things there, and I'll come back to Twinkle in a minute. But I think with IMP Software, they identified in many ways a sort of gap in the market and an issue that both schools and multi-academy trusts were facing, which is the whole issue of budget planning, and that was something that wasn't really being covered. It was just done on spreadsheets, etc. And they identified people in multi-academy trusts who were worried about financial planning, how you aggregate lots of schools together, and they come up with a solution. And I think it was, that gap in the market providing the solution, and by doing so, they managed to, I think they're probably about 55% now of the available market for their product. They also invested in something very simple in terms of customer service. And I think that those are the key things, really. Within Max, it's a success story for others. We've got Twinkle, and Twinkle's, they went down a different channel, so very much the B2C channel. And by going down to B2C channel, they're identifying teachers with that sort of worry about curriculum content, etc. And they sell directly to teachers.
They're two very different products, aren't they? And they're sort of really different products. And I think what IMP did is they did actually find a problem to solve, didn't they?
Yes, absolutely.
Because, that leads really beautifully onto the next question. So Laura, Teacher Tab, which we all know, shows teachers are really skeptical of EdTech. So, and Catherine shows us how money creates the hype. You track the M&A deals. If there were three sources that contradict each other, teacher reality, marketing promises, and investor returns, which one do you actually trust when you're analysing a company?
Well, that's a good question. I think investor returns is clearly a big one. I think when looking at the company, you're looking at some of the key some of the key metrics really they go looking at. One of those is annual recurring revenue.
Yeah.
That's a significant one. I think that the net retention rate, we talked about IMP Software just a moment ago, but I think the net retention revenue retention is critical really, because I think when you look at many businesses, and I think at the moment, if you're looking at EdTech, there's probably, however you define EdTech, I don't know, there just seems to be an awful lot of companies out there that have entered the market in the last X number of, 10 years or so, and they're very good at getting those initial 200 schools, but then scaling.
So that way.
Yeah,
and it's interesting because down to your report, there's been a massive drop as well, hasn't there, in revenue for sort of raising for
the fundraising,
18% drop.
Yeah, and I think I think if you look at the decline, there's a number of reasons for that in the last 2 years. In fact, the last 2 years, there's probably in terms of the amount of transactions, there's probably there was less fundraising by early stage companies than there was in COVID. And COVID, if you look at the pattern of fundraising, COVID wasn't terribly good, but then it had two very good years, 21, 22, and since then it's been a steady decline. I think there's a number of reasons for that. One is the fact that I think investors have increasingly starting to move away from everything's going to be digital to a point of view they're looking for businesses are actually showing some profitable growth.
Yeah,
they're not just going in sort of false promises. I think they're looking for, to some extent, they're looking for outcomes, because if you talk to schools or local academy trusts, when they're talking maybe to new suppliers, new curriculum, maybe curriculum content or whatever, they're looking, well, does that make a difference? So I think that's still an aspect. And the biggest thing that's happened over the last 2 years is AI, which is just massive. Just introduced so much uncertainty now in the market. And I was talking to someone the other day about not specifically in education, where an investor pulled back from the funds when one of their junior colleagues said to showed a senior partner, I could do this using an AI tool within half a day. And that just replicated the content that that business provided. The AI, it's really the big issue really is how do you create defensible moats in this sector?
It's really interesting because I was chatting to Neelam Palmer, Dr. Neelam Palmer. So she's doing a log around AI and an expert there. And she was talking to what we've got to, AI can do a lot of things, but it's a tool and you have to be slightly careful with it. And I think there is a lot of fear from a teaching perspective of how far is AI going to go. But it's interesting what you say, because you've got the likes of Twinkle, they've seen massive growth. The AI was there, and that's all of our content. So you then start to think, do teachers not want to use AI? They want to use something like Twinkle because it's a genuine source. Do you think that's where their growth is going?
Well, I think it's an interesting point. Again, a conversation risk on that, because if you look at how much, if you're, rather than having the free version of ChatGPT bubble, you're paying your actual annual cost for ChatGPT is more expensive than a subscription to Twinkle.
That's okay.
Okay.
I never realised that.
If you're a teacher, so why would I?
Yeah.
And I've got all this content, and it's in a sort of format. It's they're fixing sort of curriculum aligned, etc., etc. I don't need to.
That's a fair.
Why personally? Because that's Twinkle's skill is going direct to teachers, whether they're in the UK, US, Australia.
Well, they know their market, and know the teacher influence, and to just sort of keep that going and keep it going. Okay.
Selling into schools isn't like any other business-to-business sale. Budget cycles, safeguarding, multi-stakeholder decisions. It's a different game entirely. B2Education Mastery is the complete business development guide specifically for EdTech. Positioning, pipeline, stakeholder navigation, all of it on demand for you and your team. Find it at seventhsibling.co.uk.
You talked about IMP. So you know you did a software, the industry leader for last year. And as you mentioned earlier, the bootstrap from 2019, they have 550 maths, which must be 55% of the market share, 14 million of revenue, 40% growth. And obviously the recurring revenue is tremendous. So they've got retention absolutely spot on. They sell finance, it's not sexy, and there's not AI anywhere to be seen. So what do you think all the other companies are promising to revolutionise education haven't done that, and IMP have got it so far? What do you think? Why have they been so successful?
Well, I think we talk about revolutionising education, maybe rather strong for a lot of them, but
Yeah.
essentially, if you're looking at if you distinguish between what I call the sort of classroom and then the back office.
Yeah.
So I think the back office is where there's some immediate scalability, and you've seen that in consolidation. You've seen that in the natural information systems in schools, and obviously, something like IMP Software are part of that jigsaw. And there is there is scalability, because if you've got a solution, there's very few players, but there's a lot more investment required. Whereas at the curriculum side, I think, as I said earlier, there's loads of companies out there who are offering, not even necessarily offering the whole solution, just a part of the solution, because some of them have been very good at some coding, etc. And I think one of the biggest issues is they say, come back to that problem, is have they identified the problem they're trying to solve? Or is it, when you look at, how many maths products can you have in the marketplace? And so you look at that particular segment, say maths in secondary, in terms of, digital versus the traditional textbook approach. But you look at the digital, everyone is almost competing on price.
Yeah.
It's there are variations. Like I accept there are different adapted learning approaches, etc., etc. But essentially, it's maths, and they go into school, and that's the thing. They go into individual schools, and although some people now some schools now refer it up to their map when they come to purchasing decisions in classroom materials, that's a decision by the school, or the head of maths, for example, to buy the product. So you've got a lot of products, lots of heads of maths, and if your budget squeeze, you've got no fidelity.
Yeah. And the difference as well is look, you only have to do it and say 550 maths. Maths have changed, I think, significantly after the last few years, where they're centralising a lot of what they do for budget reasons as well, because it means they can centralise it all. But I think that's where they must have won as well. You obviously know better than I do but they must have got their marketing right. They must have gone straight to the maths to do that, or maybe did a bit of bottom up. But that must have been a very fundamental part of what they're doing, because maths are shifted, and they are shifting, and they are looking to centralise it.
And also, I think that maths began looking at those sort of back office systems. So when you take over a school or whatever, you look at that back office bit first, about how we can, if we're going to give them if you're going to give me 7.5% of your budget to join by multi-academy trust, for example, the first thing you look at is the back office, what kind of support we can, it's like any sort of acquisition, really. One of the first things you do is look at how you can streamline and make the company you just bought more effective. But I think back office services, be MIS, HR, budget planning, those ones are going to be the top of the agenda initiative for maths.
And you only have to look at, from an MIS perspective, Arbor, what they're doing. They're really shifting, aren't they? And taking over a little bit from SINs as well. So, and then you're right, there are, I know I got a question later on about there, but there are a lot of products out there that are duplicating a lot of what's out there. And they're throwing the word, don't shut me this down for this one, but they're throwing the word AI in, hoping that, when we look at the book from there, everyone's got AI in something. So it's interesting. It is not a sexy product at all, but they, as you mentioned earlier, they are solving a problem, which meant that admin and the procurement side of things isn't chaos. But if you look at EdTech pitch decks and funding announcements, how many are tackling boring but critical operational problems versus many that are selling transformation and revolution? And which category do you think will still exist in 5 years?
Well, I think it's great.
I hold you to this as well.
Yeah, okay. Because I think there are fewer. I must admit, I'm aware of fewer EdTech pitch decks these days.
The proof it from the drop in the last 12 months.
Yeah, the actual appetite for investing has definitely shrunk within the sector. I think the area, if I would say in terms of areas, whether it's revolutionising, but I think there are opportunities. I think people are looking perhaps where comes to sort of B2C space, where parents, maybe the online schooling. There's one possible one company that I'm aware of will probably be raising some funds this year in that sector, because they're going straight to, they've had good growth. They've got a good number of schools already enrolled. And there's a big market out there for homeschooling, which those are good idea, good technically or edtech led business can tap into. So there are some opportunities. The sort of tutoring, we've got different, that's been tried but all these, all the some B2C specs, in particular education, you've got a part of your, when you look at the amount of money you need to raise, the go-to-market is very expensive.
And it's per sector.
But it's so I think the boring may be but the game is, when you look at the boring bit, there's been so much consolidation. Because fundamental thing is that overall, when you look at the UK school sector, there's only 4,000 secondary schools.
Yeah.
20,000 primary schools. And primary schools don't spend it all here. So you're really talking about a small number. It's a very sort of defined, very, very, very small market. And I think those businesses are, I can think of things from days I won't mention here, that were promising the world 10 from one company said it was AI, but since AI came along, let's drop AI from its approach. Okay, but I think one of the fundamental things is that we're still trying to. I mean, I've touched on this before, but we're still trying to shoehorn EdTech into a current system that's really geared to assessment, to GCSE assessment, etc. That's the big issue. And it's only if people start thinking outside the box in terms of how education is delivered in K-12 will you get some major change.
Do you think as well there's some opportunities, because there is a lot of different ways of learning? I think education is changing. You talked about tutoring, online learning, blended learning maybe in the future. You've got your alternative provision. We had Matt Tipling in his and they're coming up with some online for alternative provision, because that is an area where with ADHD and all of those type of things that's coming in more. It's not very glamorous, but maybe there's opportunities there. Because like you said, I think the EdTech sector's there's been 10 years of hype, hasn't there? Really. And investors must...
Not longer, yes.
Yeah. And investors must be slightly, not saying bored, but more sceptical themselves about the next shiny...
Well, I think the thing is, at the moment, big tech, and also I think you need to look in the context of big tech.
Yeah.
So big tech has come along in a bigger way than they did 10 years ago, in a way. So your Google Classroom and schools using Teams as their learning platform. That didn't exist before COVID in many respects. So I think in terms of looking at the opportunity, I don't think big tech will be terribly interested in things that are very specific. It's not there. So you mentioned alternative provision, whatever. That's probably that's an example of an opportunity. Mm-hmm. And other opportunities might be. I can't imagine big tech being interested in things that have regulations, regulatory stuff. And so I think there will be opportunities for niche. And the thing is, as usual, you follow the money, and that has pros and cons, because so we're looking at the moment with, for example, curriculum, the curriculum and assessment review, which is now the white paper.
Yeah.
You've got the white paper send. So there's somewhere, if you start looking at where you're talking about, I think we're talking about reading assessments for year 8. So people will be thinking, what are the others? So it's a case of it's that two things. One, know that you've got a problem, a worry, and then secondly, there's some money that's going to that you could actually tap into. And these pots of money will probably be too small for big tech.
Yeah.
Might be too small for big publishers, because that's not, that's not been their traditional. But so it's really trying to identify those opportunities which come with some money, which
I have seen some really interesting send products that are sort of coming through because they're very niche. We only have to look at Every, text help. They're obviously very send orientated. I think you're right. I think it's those, they're a little bit more niche, but obviously I think, and it's about numbers at the end of the day. If you can go past that 200 mark and keep it going, that's where the money from investing that is going to be.
Yeah, and I think also you've got and particularly secondary school can be more engaged in SEND going forward. So that's going to be an opportunity.
Yeah,
without a doubt. But yeah, no, it's all this is a bit of a messy market. But
it's reading your report, you could clearly see that it's someone doing amazingly, others are down. Twinkle's 120. I couldn't believe it, and I read that 20.
But again, they get 20. It's about channels, and I think coming back to why I think so many we look at IMP Software going into going a sort of top down approach. A lot of other companies look at the top down approach. And those that means you're selling your effort. You could put more result in a way, but more numbers into a smaller. It's more like hyper marketing, isn't it? And so you're identifying, within the map, you've got this one person who can make the decision for maybe 20 schools within that. Whereas if you're a curriculum person, you've got to go to the head of the subjects.
And Jo Stones, we'll talk to her in the next episode, and she's a classic example of that. I actually, worked with Jo, and they've got, 20 schools, and, one person, obviously the CEO makes the final decision, but from a finance perspective, you put the numbers together and make out, is it worthwhile or is it not worthwhile? Yeah. And I do think the MAT option, more schools are joining out. I only have to look at Devon and Cornwall, and 98% of these schools in Devon and Cornwall belong to a MAT.
Right, okay.
Yeah, so it's a high percentage, and also deprived areas like Leicestershire, not so much London. There's different pockets that have got those. So,
but also right, because we're increasing our curriculum, there's local authorities, so that in the main, lots of places of reduced to such an extent they can no longer really provide the support to schools that they used to.
But they have a framework for SEND, which is interesting. Alternative provision. So
they still have these. Yeah. And I think that's been one of the a bit of plus and minus really for a lot of. So the fact that the diminished role of local authorities had an interesting role insofar as you had primary advisors, secondary advisors, and if you were producing something for the curriculum in particular, these advisors would then get their groups of schools together and you would look at products, and there was a channel there. As the role of the local authorities diminished, then it's very much about you as a company, a tech company, you have to go to individual schools. Advisor doesn't exist in a way that was quite successful for a number of companies in the past, and it's only now as Max is sort of moving from the sort of number one priority as the back office. Now they're looking at sort of having a common curriculum across their primary, secondary phases, and therefore there's content and systems that.
Well, economies of scale as well. It just means if you've got another school, you can push it out straight away because it works. So it's that skill. There's I suppose more going that way as well. So obviously when a company gets acquired in EdTech, what actually determines the price? Is it the number of students impacted, or you mentioned earlier about the recurring revenue and they're looking for profit now, not just breaking even? But be honest, do buyers care about the educational outcomes? Purely a financial transaction, sorry.
Well, I think, everyone talks about democratizing education, which is a thing I've seen so many press releases about fundraising, whether it's in the UK, US, or wherever. There is a relationship. Because obviously, if the product doesn't work or whatever, your service doesn't deliver, it's ultimately you're going to lose subscribers, etc. So there is a causal relationship between that and the recurring revenue. But I think the valuation, though there's no one rule, but clearly annual recurring revenue increasingly is a key thing. Net retention rate, because that will, as you know, greater than 100, we're showing some growth. You've got adding the product. You've got made a good roadmap. You've got a good, I think numbers is important, that you've got a good market share. How can you take this further? Scalability, have you done anything internationally, for example, that if we invest in you, then you can, so there are not a number of factors that will affect valuation, sometimes it can be the right place at the right time.
Right time. Love.
And I remember many years ago selling a business in business partnership that was just the right place at the right time in terms of the valuation that the owners got.
So, because if you look at the hat investment, I've been there as well, I've done that. And, say, for example, you get to 100 schools and the finances look really good. And what I actually learned the other day through Neelam was that a retention rate for teachers, if you can get a 60% retention on teachers using the platform, you're doing really, really well.
Yeah.
But then that's a different number from recurring revenue where I know they're buying it again. But it should be interesting to see if anyone actually works that, puts those.
Well, it's interesting. It is about, that's very much how your prize embedded, isn't it?
Mm-hmm. Yeah.
Within a school. And I won't make them go rich in the company, but so one business I've done for a long time in the primary sector, put extraordinary amount of investment in its product, because in primary it's very much it sort of permeates the whole school. Put a lot of investment into training supported teachers use that product, because for many that fall by the wayside, often it was a product was funded by some kind of government funding. As soon as that funding went, the product was still on the shelf, and or a member of staff left who was responsible.
That's it.
And that was it. And so this company put part of this, put a lot of investment, it monitored logins, training, etc., and was acquired by a US business. It essentially sort of was quite dismissive of that aspect of, I think when they probably acquired it, it may have had a sort of renewal rate, maybe at 90% or something like that in primary, and that has just fell off the cliff since they took away the training. That's an aspect of. So there's a lot. I think so I think it's you. I think that's another thing in connection with EdTech is there's an assumption that you've just got an app on the phone. And when everyone uses apps, you don't need any training. You know me.
Doors, is it? We all know that.
You don't need that education product. It's just like the app on the phone. You don't need training, but it's not. I don't think that's true in many applications.
Oh no, I've just gone through, and I've helped other way, and I think adoption is the hardest part, and keeping them using it is the hardest part. And you have to train them. You have to handhold every single school that you're on board. I don't think I've known a product. It'd be interesting to hear if somebody has product that has just put it in and hey presto, it's worked.
Yeah, in another life, I bought a training business for schools online, which perhaps arrogantly we thought we could just apply our business model to it, and that involved training. It was an online CPD package. And there was a whole school subscription. But what we didn't do, having applied it, is we just didn't invest in making sure it was embedded within the schools that bought it. So when it came up for renewal, there was a sort of £2,000-3,000 at that time subscription.
It's a lot of money.
So it's a lot. So I think that's what that's. Yeah, I think people, as you said, getting to 200 is the easy bit. It's actually how you then get to the
next
500.
Yeah.
1,000 there.
Yeah. And I think there are not a lot of companies that have scaled to that sort of capacity, that I know of. All the MISs and there you have, but you've got your prominent players, which all we know all they are. But, I think Sparx Maths was a good one. 3P Learning, they were another one, but sorry. But there's, from a curriculum perspective, unless you're one of the big publishers, I think from an EdTech perspective, God, you've done amazingly if you get up to 500, 600.
Well, Spark is probably mentioned Sparx Maths because they were successful because they won cutting edge maths. That gave them X number of schools overnight.
Literally,
they bought market share. That was a key thing about.
So is that the way forward? Do you acquire something that's already in, and then
I think you go actually
because that happens, doesn't it?
Well, you go on that, and again, there's one business that was sold just after COVID, which was in the sort of curriculum space. I remember speaking to the company that bought it, which was not in the curriculum space. It was very much in back office IT really. And the only part of that was in schools. And their view of that business was, that they've got 500 schools that don't use our products. And we've got 500 schools that don't use their products. So they were purely buying that business as how where they assess the value. It wasn't just on. It was looking at how they can have the cross selling between the.
Have had a cross pollination, isn't it?
Yes, and I think the business they acquire is sort of has declined.
Yeah.
Bigger, yeah. So yeah.
So talking about funding rounds and company performance, when you look at companies that had a major presence at BET, is there a correlation with actual business performance? Does BET present or predict anything about revenue growth, customer retention, or acquisition success? I'm not having a pop of Beck here, by the way, but I just think it's interesting. Beck is massive now, isn't it?
Yeah.
And I walked around, do people get the real value from it? But is there a correlation to because there's all the big businesses there that are doing well, to acquisition?
No to all of the above, I think. It's
Are you being slightly diplomatic on that one?
Is my instinct. No, I think I used to think might be an opportunity to actually develop a BET app where you as you took an image of the stand, it will give you the details of the company, and then there comes to some kind of estimate about whether size equals revenue. But it doesn't. There are some of the smallest businesses that are there, up to some of the most profitable growing businesses, and there are lots of businesses that don't go there. That sort of fear of missing out for some.
Yeah.
That's a big issue. But a number of companies, that used to be there don't go because they've got other channels. I think BET's become very much an international. It's for a number of years now it's been international, and I think that's the big. Yeah, so I think if you're a company looking to get international, God, I never know what the real footfall is of teachers. I think they've got a great. I think they've got a great program of the sort of event program. It's very interesting, but I really don't know how much business people actually do meet the people.
I walk around and I see the little launch pad, and this isn't a smart, but I think some businesses don't know how to be at places like that. Nobody's showing them what actually they need to do, how it works, follow up, and all of those type of different things. But like you say, you have your typical. It's becoming more of the big boys, and you've got some one did something interesting where they had lots of different models of companies on, and then you've got more. And interestingly, you've got some really interesting products coming from overseas. I don't know whether you went to the South Korean stand, the Spanish stand, and there was a couple of other ones. And there were some really good products there, actually. And obviously, there were some great products on the Launchpad of RO, but there were some nice international products that I think are trying to sort of get into the international market, but also the UK market.
Yes, and all they get disappointed when they realise there's no money.
And how blooming hard it is.
It is, yeah. So it's quite I can't remember it's the Swedish guys that dress up.
Oh, in the suits. They're a masked one, aren't they?
They're masked, yeah. That's part. But again, they're doing a lot of they're a very small business, and they raise about $40 billion. So they raise quite a bit of money, and they're on tuck in the US market, because in the US they could go to school districts.
Yeah.
Well, coming over here, they're sort of looking at the UK market, thinking, where do you start? Where do you and so there's issue. But I think the other cynical view would be that some of the bigger stands are companies that are looking to sell.
Yeah.
But I think there's a number there that you can. Yeah, it's. I think your point is quite bad. I think you've got to when you're spending all that money, you've got to have some. It's not just being on a stand. You've got to have something behind it to get people to visit you.
To engage.
You actually engage. That's the right word.
And engage, I think.
Let's get in free chocolate or free employment.
It
is when your sales team pitches features to school leaders, you will lose deals you should be winning. Education Sales Mastery teaches concept-led selling, how to align your product to what schools actually care about, run real discovery conversations, and handle objections without dropping your price. Find it at seventhsibling.co.uk.
So, it's like that. Most EdTech's, they're, obsessed over growth. How many can I sign this quarter? But, the numbers from a retention and expansion matter more than acquisition. Why do you think the industry still rewards founders who show hockey stick new customer growth, even when their churn rates would make a SaaS investor scream or run away?
Yeah, well, I think it depends who you talk to. I think people become more skeptical now
Yeah.
of that. And then there's this, we're going to make, I'll lose a whole shitload of money. But being honest, I think investors are walking away from that increasingly walking away from that kind of model. And I think also depends on the stage where you're at. So, if you're really kicked off and you suddenly get 200 overnight, and also the problem is people talk about number of schools, they talk about number of users, the number of when you start doing the math, the difference between the number of schools, the number of teachers, it gets very confusing for investors about what is the key thing with a relatively early stage company. But I think as an investor, you would be more now looking at more about the net retention rate, particularly if you're sort of been around 2-3 years and you've got some traction in the market. I think you're now looking at, then you want to invest in that business because they've got some traction. It's then that net retention rate, how many people are renewing their subscription, how many are being added. I think that becomes the key thing. And if you're not someone over 100%, then you'll probably quite interested in investing it, rather than simply saying we've got 300 schools.
And I think the impact, are you genuinely solving a problem now is coming into play more and more. It's not just as I said, another curriculum tablet. It's not that bad. I think, if you're a savvy investor, you are going to look at retention. Are they genuinely keeping the users that that they've got coming in? And also, does it genuinely impact the pass rate?
And I think the other interesting thing that's really happened as well, in a way, when it comes to maybe sort of investor due diligence, even if you're acquiring a business now, it's the tech stack.
Yeah.
Yeah, I think in the past you did the commercial due diligence, the legal due diligence, financial due diligence, but who was actually going under the bonnet and looking how good your tech stack was? And I think that's a big piece now of the investor due diligence.
Because that never was before, was it?
No.
Never did anyone look and go, okay, what are you using at the back end? And, CRM, well, that whole because that's newer, actually.
It is. It's very, and particularly if you're going, want to talk about integrate all these things, but can they be integrated? There's all these.
Yeah. But one solves a lot of that problem, doesn't it?
It does. It solves a link between MIS and product, but it doesn't necessarily do the link between. So some one or two solutions are coming into the market now where you can sort of plug and play in a way to put other some companies are going. What I want is that sort of single sign-on.
Yeah.
So there are some aspects, but nevertheless, it's still it's still an issue about what is the quality of
this tech stuff.
What's under the body, really.
Yeah, what oil's been put in. So look, you've been doing the assignment before since 2004.
A long time.
A long time. So you would have seen tech companies launched, 5, 10, 15 years ago. How many is still independent of, and how many got acquired, and how many disappeared? Have you done maths? And what do the survivors have in common than the ones that disappeared?
Yeah, no, it's interesting. I don't really have
the figures
of stats, but I think one of the things having sort of got around longer in the sector is that in a way over the last 20 years, startups in the sector, and let's say EdTech, it's been easier to form startups in a way than it was 20 years ago, and particularly in a number of areas, but certainly in anything to do with content assessment, because you needed, in 20 years ago, you actually needed quite a bit of investment to get something off the ground.
Yeah.
Whereas, I know, not trying to sort of be disparaging in it, but a bit of code, and you've got a product in a way, online. And there's lots of people doing that in there. So what I think the trend you've seen is you've got more and more startups than you ever had 20 years ago in the sector. all often maybe trying to do the same thing, trying to deliver a solution, part of the solution, etc. And that's the big challenge. And then from a growth point of view, you know, if you look at some of those 20 years ago, whatever, again, I was all in a surviving. But if you were acquiring a business or you were selling a business, often that business might have revenue of 5 million, say, let's say 5 million, 1 million EBITDA. I think what you're seeing now is that the acquirers, that there's a dearth of that sort of number of companies in that sort of space. There's so many of the early stage, however, probably in 10 years or so, even the last 10 years, are probably 2 million, 2 million, and they're all plateaus. Well, and obviously there's some success stories. You know, in all this there are success stories, but there's a lot of companies out there that are chunking away with.
I think that's a good
Chunking away, yeah. Treading water is something with that sort of one. Just happy to keep the renewals blowing in. Yeah.
Making living, do you think, you know, maybe they're making a living and they're happy that way, which is...
Well, this is it. I think that's it. I think if you look at 20 years, you know, companies, you know, I think there's... Because the other thing is in the... I remember this when the business I had, that I had, the thought was that if we get to this size, then there's an obvious company that would buy us. But what we didn't take into account was the fact that the company over there we thought would buy us just accelerated. So even though we grew, we were forever going to be too small for that company. Yeah. Once that company in 5-10 years got to the size it did, we would go be too small. We were never ever going to be bought by that business. And I think what you're seeing now, you've got a lot of big companies out there, and you've got to, when they're looking at opportunities to acquire, they're now looking at £2 to £3 million.
Is that what? I was going to ask that question. I know it's gone off the questions, but what is that? Yeah, what is this? Is that the sort of size now? Do you think that other companies, the larger companies, would look at a business at about two? They need to be turning over about 2.
Well, I think they only look at those businesses, and you know, if you get a look at this, I can't really speak for Twinkle, but they acquired EdTech's, which have a revenue of 2 million, so, and they made 7 million. But that's a business which they acquired, assuming they wanted a footprint in secondary, which is in there, and it was assessed. Almost, you know, it was affirmative. It was a form. They didn't have that within the company. So it really depends on, in many ways, what your product. If you know that was formative assessment. Twinkle, despite their size, did not have formative assessment. So
almost you've got to create a product that other companies haven't done. You're filling a gap in the bigger tech.
You know, a lot of businesses, if it's not, and of course that's the other. You know, talk about the interest. My takeaway from Bev was less about the sort of AI at the front, on their stand, so could have AI, but it was how AI was being used to bring products to market. So a number of people I spoke to at the BET who were now using AI for coding. That what might take a team of X number of developers.
It's unbelievable.
Could now you could potentially bring you features, whatever, in a very short period of time.
It is incredible. My son has built a movie app. It's called
yes.
And I'm not talk because I don't want to, because it's not launched yet. But he does not know how to code, and he's used AI to code the app, the web face, everything. And you're right. So it's interesting. They've reduced cost and development costs. Huge.
Oh, absolutely. I think that's a big shift. It also comes with a problem, I think, as well, because if you've got a new product, if you've got new features, you've got existing product, new features, how do you keep adding new features to them? You could do an awful lot very quickly.
But then that's not the right thing, because then you lose your cause that you were always there. And, you know, do you not find sometimes that we're going completely, but from an EdTech perspective, or any software perspective, you always want to keep adding new features, when you actually haven't solved the one that you started with.
No, basically, well, that's the issue, because I think that's how you you can do all this quickly, but how many? Because obviously with a SaaS product, it's a bit more easy than say you've got to upload all this way. But nevertheless, people have got to find those new features, and you've got to communicate to your market what those new features are. So I think you still got to probably your sort of release and updates of your product.
Yeah.
And then the question is, and this is one of the things I find particularly it's not just education, but in certainly the school sector, you can add all these new features, but are people going to pay extra for these new features? So it's interesting.
It is.
Fine.
We've gone off pat there. So no, it's all right. So if schools actually bought what they needed instead of what gets marketed to them, what would change the EdTech landscape? I think this is coming into play. I think this is happening now. Do you not think? Would half of the companies disappear? Do you not think they're getting a bit more savvy about what they're buying?
Yeah, I think it's particularly this is very much a curriculum side, is on the classroom side. Is who purchases. I think that's if it's X number of teachers buying this product or X. I think that's we got quite it's such a fragmented market for certain products and certain levels, and I think if someone starts to look at maybe with the Macs, starts to think about consolidation, they do start to go down. You go down the roof. I think provided it doesn't, it's because the issue there that is and I think we saw it in in another sort of generation under the last layer of government where there was lots of money chucked at it in terms of initiatives. And it was the big companies that really benefited, big tech, benefited from that. So, but as come back to an earlier point, if you've got a product that's niche, very niche, does a purpose that is, that will succeed. But I think the premise of your question is that I think there will be a lot of pressure on our companies whom there's some kind of more professional procurement classroom.
Yeah, and I think do we really need? Does it really impact us?
Yeah.
I think that they're asking those questions in a deeper way, and I do think there are some companies that will struggle because our buyers are changing. You can't do what we did 10 years ago now. It has completely changed.
Yeah.
So I know we've got this is our final question, but if you could tell, so I've got Jo Stone coming up.
Okay, right.
Okay. And so she works for 6,000 pupils and 20 schools. So she's been doing it since 2011. So she would have been in it, the peak of it all, right through and all the high. If there's one thing that the sign-up report data shows about which companies are genuinely worth her time versus which ones are just noise, what would it be?
A good question. I think it's coming back to the point that if the companies that I think that are interested in something you're proper for, I think that's the key thing. That if you're buying a product that sort of is very reflective of the way you work within the school. There's some empathy. There's as much about product as it about the people involved. I think that's a key thing. And I think with tech, you can't say it's all just by just have any interaction with people.
I think it's you have to take away. I very much work on the sales marketing side, but one thing I have learned is that if you genuinely understand the person that's sitting in front of you and understand the problem that they are actually trying to solve, that's how you win schools. All right. And I think you have to take all the hype away and all the sizzle away and just look at what core impact of that product will do. And that's not just for education. I think that's across any type of business.
Because I always say with any, but particularly with startups, there's a three sort of skill set that are required in terms of going into schools. You've got sales and marketing expertise, which is often the bit that's forgotten about.
Yeah.
You've got the technology, the technical skills, but you also got the understands the pedagogy actually. So that's why you'll see a number of companies increasingly having a sort of education policy, personal education
lead,
whatever the title is, but someone who actually understands what
Patrick McCarthy's one of those, he's director of education, he's in Textile.
Yeah.
Great time. That's the
But it's that role. But that's I think that's the
Because you
key.
have to understand it, because I think the danger is that sometimes there's tech people sat behind trying to sell tech, but actually you're not. You're trying to solve a problem. And I think that's why more businesses are bringing in teachers actually to work for and to try and actually nail that side of things.
but you certainly, I think those three elements, because as I said earlier, so many might be the teacher's got a bit of technical skill. If you do something, you've got some maze that put you outside, but only what the sales and marketing person.
Yeah.
Or team, turn up, that's so important.
Oh, it is. And I think I've worked in lots of different sectors, but I think the education sector is a real, not internationally, but the UK sector is a very tough sector. And I know businesses that haven't even touched the UK and they've just gone straight out into the international market because of the challenges. Because the sales marketing side is the tough side. It's the, if you've got it all there, how do we sell it? What it is, very me. I would recommend anybody actually signing up to the assignment for because it is good. No, I'll put a plug in there for you. It's good.
Okay, that's very good news.
Now I get a monthly, but it just keeps me up to date with what's going on and everything. So
That's the news.
no, it's good. So that was Ed Tranham, the editor of the assignment report. Next episode, Jo Stone should be making EdTech actually work in classrooms since 2011. She's heard all the promises, she's seen all the hype cycles, and she's about to tell us which companies survived contact with reality and which ones didn't. So, love to see you the next time on B2Education Unpacked, the Education Growth Podcast. Thank you so much to Ed for joining us.
Thank you. Thank you, Steph. Thank you.
I just wanted to say thank you. Thank you so much for your support. Thank you for turning up and thank you for being here. I really, really do appreciate it. Do me one last favour. Just press the subscribe and then you'll get notified of all of our amazing podcasts.